Good evening and a very warm welcome to First Issues. It's been exactly 8 days since the Minister of Finance and Development Planning, Mr. Kenneth Matambo, gave the much anticipated 2016-2017 budget proposals. In the days since last Monday, many people have given their 2 cents as to whether the proposals will be effective or not in addressing the various external and internal challenges facing the national economy.
Difficult situation. I think very clearly, I was a bit surprised by how much the revenue figures are expected to decline next year. And it'll be the second year of decline. So clearly the minister's operating in a very tight fiscal scenario. We've got 2 quite big budget deficits. I think they're worrying. I mean, they're manageable, the size that they are, but they're clearly something to be concerned about for the future. So I think on the spending side, there was very little room for maneuver.
My take is a very, very good proposition, and I'll tell you why. Because we started a project called ESP, as the Minister of Finance said. When there isn't much money out there, when the global economy is down, when the diamond revenues are down, and we decided to be adventurous and fast-track certain things that have been behind schedule. Including increasing funding for ministries such as Ministry of Health. For the Minister of Finance to be able to do that with such a little budget deficit, I think it's commendable.
Well, obviously it's a tight rope walk. We know that commodity prices are down. We know that government revenues are down. Therefore, I think it's a very pragmatic budget.
I want to hear the government talking positively about reducing its wage bill, because as the government shrinks, then the private sector expands. We have to expand into the space that government is leaving for us. But government is spending a lot of time trying to solve problems of employment. It cannot work. Governments don't solve employment problems. Governments provide the environment, conducive environment for the private sector to solve unemployment problems.
I mean, the one area that I think is a huge problem for business at the moment is the whole very restrictive environment with regard to work permits and accessing foreign skills and trying to attract foreign investors. It's really, Botswana is not a particularly attractive environment at the moment, in part because even if an investor comes, they have got no assurance that in 5 years' time they'll have their work permit renewed. And I think that unless that whole immigration system is radically reformed and made much more attractive, both with regards to investors and bringing in scarce skills, that it'll be very difficult to get the investment that's needed to create the jobs that are required.
Tonight, however, we present the views of members of industry and the financial sector who convened at the Gaborone International Convention Center around this time last week to give us a deeper understanding of what the budget proposals mean for the ordinary Motswana. The speech is fresh on everyone's mind. There's a buzz of anticipation in the air. The stage is set, and we hear what the speakers had to say straight after the break. Welcome back to First Issues. As up next, we speak to John Cairns from FNB to give us an overview of the global economy. Mwatudi Sababule, Research Manager at First National Bank, shares their views as to the future of Botswana's economy. Chandra Chauhan, Group CEO of Sefalana Holdings, speaks of the budget proposal's impact on the business and investment climate. And Dr. Taufila Nyamadzabo, the Secretary for Economic Affairs at the Ministry of Finance, discusses the budget implications from slowing SACU receipts and how the economic stimulus program will affect the fiscal policy implementation. This experienced panel was welcomed by the Chief Executive Officer of First National Bank, the facilitators of the important conversations that took place last Tuesday evening at the annual Budget Review Seminar. When discussing FNB's findings with regards to the global economic outlook, John Cairns pointed to 3 main points of concern to Botswana, that being the challenges facing the South African economy, the prospects of yet another global economic downturn, as well as fallen commodity prices.
Really what I did was highlight 3 key points that are impacting on Botswana. The first is the global downturn in commodity prices. So we've seen prices drop as much as 80% for some commodities after the crisis, and this is reducing both Botswana and the region's economic growth. The second point I wanted to get across is the concerns around the global economy at the moment, the potential for another very sharp slowdown, which would have again have adverse implications for Botswana. And then the third one, the inescapable realities of what's happening south of your border. In other words, the problems in South Africa in terms of growth, inflation, interest rates, credit rating downgrades, with again negative implications for Botswana, declining SACU receipts and so on.
So with regards to the commodity prices, we know, of course, as Botswana, we are highly dependent on mineral revenues. What were the details of that particular?
As I said, we've had this dramatic decline in commodity prices, and there are, of course, some direct adverse impacts. So you're a gold, a copper, a nickel exporter, and obviously those companies are going to be struggling because of that. And then again, there's the wider implications for the region. Africa is no longer perceived as Africa rising as it was maybe a few years ago essentially because of the problems of the slowdown in the commodity prices. Botswana has to some extent sort of missed the worst of the commodity downturn because diamond prices to some extent have been less impacted. However, the reason diamond prices have held up better is because Botswana has cut production. And that, of course, is reflected directly in your GDP growth numbers and in lower tax revenues. It was a very tough budget for the minister because just simply the revenue isn't there to go out and we're with a rapidly rising expenditure program.
Research manager Moatlhodi Sebabole is in agreement that the Botswana economy is facing a number of threats, but does say that the budget proposals presented in Parliament indicate that the outlook is somewhat healthy.
I think at the moment, to get a sense of, from the global perspective, there's a bit of a hailstorm in the sense of a lot of uncertainties coming through, where now sub-Saharan Africa is projected to grow below maybe what it grew last year. And also where there are issues still around commodities, there are issues still around exports, and the ability of countries to even import as much as they were before. So in the case of Botswana, from the speech coming through by the minister yesterday, you still have a fiscal policy that is, or economy that is still healthy somewhat, but under a lot of threat. Under a lot of threat in the sense of the ability to collect revenues as much as we were doing before, from the mineral revenue side of things, as well as from SACU. So that is where the threat is coming from. And then from the projections that we're coming through now, where the economy forecasted to grow, or to have grown rather, last year by just around 1%, it gives a sense of maybe the non-mining private sector and the effect of the supply side of water electricity, as an example, is much more dire than we had thought at the beginning of last year or mid last year.
And do we foresee commodity prices improving in 2016? Are we going to continue seeing them falling?
Our view at FNB, RMB is that commodity prices are near the bottom of the cycle. Perhaps we'll have some upturn this year, but I think we need to be very cautious of being too optimistic there. I think from a budgeting perspective, as the minister did, you have to take a fairly conservative assumption on what's going to happen. Again, the implication is slow rates of growth, probably for Botswana and the region through this year, maybe, or hopefully at least picking up into 2017.
You mentioned another slowdown. Could you please unpack that for us?
It's worrying a lot of people, and those of you who have been watching global equity markets would have seen a very sharp fall off in the early part of this year. That relates to that data globally has been quite weak. For many years now, we've been hoping that the US economy would really pick up steam, drag the rest of the world along with it. Unfortunately, the US seems to be faltering somewhat. Very weak figures coming out of the fourth quarter from the US, even into 2016. At this stage, the core view should still be that the global economy is in a slow and steady recovery. But the risks, the tail risks that we could be faltering are rising. And again, this is concerning a lot of people And again, if it did happen that the global economy slowed down, it would just mean prolonged pain for Botswana, for South Africa, for the region as a whole.
You mentioned that there are some real threats, and you've listed them, but growth projections for our economy in 2016, where do you see growth coming from, potentials and opportunities for this year?
Okay, at this point, I'd like to think maybe the growth projections of about 4% is a bit overly optimistic, maybe, or just a little ambitious, in my opinion, in the sense that you still have the structural issues feeding through going into 2016. If you look at, you're already on the second month of the calendar year of 2016, and still you have not necessarily seen an uptick. Yes, the January sales in diamonds were somewhat better than what they were year on year last year, so that's a bit of comfort. You still have 9 sales to go to the end of the year, but still you still have the outlook of diamond industry, which is still expected to remain a little bit soft, maybe better than it was last year, but definitely not as good as it was in 2014 or 2013. So given that side of recovery in diamond, which won't be strong, as strong as you want it to be, and also on the other side, given the biggest issue again, the water and electricity, it's really negating a lot of growth. Given the drought that we are dealing with, and government having to put up drought relief measures, and the ability, the food security issues that are coming through in this year, it still gives you a sense of the above 4% estimated growth might be a little bit optimistic. Maybe the realistic growth that you probably expect to see is your sub 3% levels, your 2% levels. So I think, yes, we might be performing better than we did in 2015, but the issues are still feeding through, they're still spilling over into this year. So there will be some recovery, but not robust enough to get us to the 5%, 4% levels that we might have seen in the prior years. I think the main message is to realize that we obviously undergoing turbulence. And it's not in a unique situation to Botswana. If anything, it makes it a bit magnified for Botswana, given maybe self-sufficiency levels that we have here as a country. We're not necessarily a production-led economy, we're a consumption-led economy. And naturally, Botswana is viewed as consumeristic people. And you find we import a lot of things outside. So as a result of that, we obviously suffer a lot of imported inflation. So if there are food prices going up in the producing nations, we will obviously get to get a knock on that side. If the demand is not being strong, maybe in our normal US market where our diamonds go, or we've been seeing pickups in the Asian markets, particularly India and China, if there are no normal pickups in there, it really speaks to then the shocks that we also have to absorb as an economy here. So I think the main message there is to say, we have been talking about diversification for the longest time, but it looks like we still suffer the same volatilities or the same exposures that we've been suffering for the longest time. It's coming from the fact that if you look at the major contribution to our revenue, you've got your mining at over 35%, you've got your SACU at over 25%. Break that down and you see actually we depend on other economies to survive to an extent, because minerals, we are talking the US and the dollar. SACU, we are talking primarily South Africa contributing around your 90%. So it shows that there's a lot that needs to be done to diversify not just the growth of the economy, but the mineral revenue or the revenue that we collect. And things such as maybe looking into tax efficiencies among the things that you probably have to be looking into. And also the other important one should be the growth going forward, because there need to be a balance in the wheels that are moving. From the government side of things is to create an enabling environment that will then make business or private sector thrive. If private sector starts to thrive and are more engaged in a more enabling environment, then we see private sector having more confidence in the economy of the local economy, and they're able to create more jobs. And once that happens, you have that trickle multiply effect, where now you see certain sectors that are not naturally performing well starting to boom. You now see production here being more export-oriented. You now see us actually substituting our imports. So it really speaks to, if there's any time now, it is now to actually look at the structural reforms, where now the whole economy has got to go through a complete makeup, where you now make sure that the wheels that are moving forward actually do get us to get less dependent on external markets, particularly for revenue collection, as well as even the direction of the growth that we see locally.
Do you sense that there is a will to have those structural reforms happen, to make them happen?
By all means, there is indication. If you look at several policies that we have in place, if you look at your economic diversification drive, you look at your citizen economic empowerment, you look at certain quasi-government institutions that have been set up, such as your BITC, now we're speaking Special Economic Zone Authority, which should then be the main drive of how exactly we're going to be dissecting certain parts of our country and actually streamlining certain investments in here. So it's really, the wheels are moving, but the biggest problem maybe has been implementation, the oil that we really need for these wheels to move at a pace that we needed to, because I think this is the time to step on the gas.
We present the views of members of industry and the financial sector who convened at the Gaborone International Convention Center around this time last week to give us a deeper understanding of what the budget proposals mean for the ordinary Motswana. Mr. Sibabale pointed to a probable dip in business confidence, and now the group CEO of Sefalana Holdings joins us to tell us what they project that the impact on the business and investment climate will be.
Unfortunately, it left us a little bit disappointed because we note from yesterday's budget speech that recurrent expenditure is almost at the same levels as last year. The development budget has increased marginally. In the previous year, the budget was about 12 billion, and today we're talking about 14.5 billion. So there's an increase of about 2.5 billion. So I guess that most of the focus is going to be on the ESP, which is currently the discussion, the topic under discussion. And what do we expect from the ESP is that obviously certain projects that have not been implemented either in the current year or in previous years will be fast-tracked. So that is very encouraging because certain areas such as power and water has lacked some investment over the last couple of years, and I see that being fast-tracked. And to bring the economy back on track, it's very essential that the main commodities of water and power are fully back on track, because it will enable the businesses to just operate that much more efficiently going forward. So that's one of the main things that I see. Obviously, employment creation for the country is very important at the moment because there's a number of unemployment is fairly high. There's a lot of new graduates coming out from the university and the colleges not getting employment opportunities. And that's just because there is not, with the global decline in commodity prices, etc., our ability to grow the economy has just come to a slight standstill. But we are not the only one. All the surrounding countries around us are going through the same phase. We are a lot more fortunate in the sense that the country built up some good reserves over the last 10, 15 years, and it will enable us to see it through over the next few years, But the ESP is probably the only area which will give the economy a boost, and hopefully we'll see some money being introduced into the economy that will encourage spending. And if there is spending that is being increased, then that will eventually lead to maybe some more investments into industry. And if you see that, then that will create employment. So the idea that the government has implemented in bringing ESP on target, hopefully it will come some way towards bringing employment and bringing some growth to the country.
Many tuned in to watch the 2016-2017 budget speech specifically to find out more about the Economic Stimulus Program, or the ESP. And now Dr. Nyamadzabo from the Ministry of Finance tells us exactly how the ESP will affect the fiscal policy implementation.
Well, the Economic Stimulus Project is certainly it does increase the expenditure by government to be able to implement some of those projects, especially in the areas of agriculture, infrastructure, and other areas. The intention being really to ensure that the economy of Botswana grows, and when the economy of Botswana grows, employment will be generated, and thereby also reduce the levels of poverty in the economy. So it's really providing additional amounts to be able to ensure that the economy of Botswana grows, given that in recent years we have observed a decrease in the growth rate of the economy, mostly due to external sources, because the demand for our commodities like diamonds has also gone down. The demand for commodities like copper, nickel has also gone down. And that one, of course, being due to the reduced demand by the Chinese economy, because it's the one which has also been importing a lot of minerals. But on the diamond side, it's actually the slower growth of our major consumers, like the US, even though it has started to grow again, and the Japanese economy. So once those economies grow, then we can then start to observe an increase in the growth rate of Botswana's economy.
So am I right to conclude that we are currently spending more than we would usually spend? I think we are renowned for being a little more cautious in our fiscal policy. Is that what really the ESP boils down to?
That is exactly what it boils down to. It's not the first time we have been doing this. In 2008, 2009, we more or less did the same thing. Our revenues were also going down. The economy was also more or less contracting, and we decided to increase our expenditure. At that time, we even borrowed a loan from the African Development Bank of just about 1.5 billion to maintain our expenditure. Because if your economy is going down in a recessionary period and then you cut expenditure, then you worsen your economic situation. Your economy would even contract more than would be the case. So by maintaining the same level of expenditure, you ensure that economic activity is maintained, and thereby ensure that even your losses in jobs and losses in economic activity is curtailed.
As we conclude this evening's program, all our speakers give us their overall take as to how this year's budget speech is to affect Botswana's economy going forward.
The Botswana government has come out with a counter-cyclical fiscal policy. In other words, a policy that's trying to offset some of all these negatives that we've been speaking about this evening. That is good in some sense to have a counter-cyclical policy. It will limit the damage that Botswana is seeing when all these other factors are negative. I think, however, that Botswana needs to understand that if all these other negatives, the potential negatives, play out, then Botswana will be fiscally challenged. So if you have a counter-cyclical fiscal policy now, you are potentially opening yourself up to needing more fiscal tightening in the future.
Well, the approach definitely there shouldn't be the same. It should be more robust, because it means if you're dealing with a deficit, there needs to be an absolute plan, which I'm sure is probably in place, but it obviously needs to be delivered to the end. Where now we're seeing how you're going to be balancing between a drawdown on savings as well as a combination of the debt management strategy.
I would have expected some sort of change in fiscal management, in tax rates, or trying to boost manufacturing and giving manufacturing some leverage on tax, or maybe allowing manufacturers to set up in the special economic zones that they are talking about setting up, because you need to attract that investment into certain industries. And one of the comments that I made earlier on is that I'd like to see Botswana becoming a lot more reliant on its own food resources.
Our view is that things will be improving next year. Compared to, I think 2015 was a bad year in terms of Botswana, as I also mentioned. Our growth rates, which were originally predicted at around 4, were reduced to 2.6 at the time of the budget strategy paper in September. We have subsequently reduced that even further to 1%. But the improvement in the global economy, the growth rates in the US, the advanced countries, and economies in Southeast Asia, we expect there will be a general improvement in the demand for our commodities.
From me, Nameto Samakula, the team behind First Issues, and our sponsors, First National Bank, we wish you a good night and pleasant viewing.